think you really want quality in this environment because the macro is uncertain. We don't know exactly what the Fed is going to do. We all think that they should ease at this point, but how many times, to Steve's point, where if they take a wait and see and they say they're going to take a wait and see in July, I think the market might be disappointed in that. So I want to own quality and I want to own a barbell. I want to own some cyclicals early cycle when the Fed starts to cut. And then I also want to own some defensives as well. I mean, the defensives have actually worked really well this week. It's not been this.
But the way the market's reacted this week, and if the Fed does cut and it gets as aggressive in cutting as the market expects, do you really need to be that discriminating in what you're buying?
Oh, I always am. I mean, I think fundamentals matter, right? But I think you don't necessarily want to be all on one side. I don't think you necessarily all. I mean, everyone is piled into defensives. Everybody's piled into staples, utilities. I mean, staples are trading on average 24 times forward estimates for 2 or 3% organic growth.
Steph, are you trading the Fed rate cut, or are you trading the economic and financial impact of the Fed rate cut? Do you think that when the Fed cuts rates, it gets rid of whatever the weakness that was going to show up in corporate profits, whatever the negatives that were going to come from imports?
No.
Scott,
no.
No, I can't ask that question of Stephanie, or no?
No, I'm telling you, it's not going to solve the immediate issues that are in the economy.
Right.
I mean, the trade. A CEO out there is not going to say, oh, great, the Fed just cut rates, so I'm going to put the money that I was holding aside for that new plant into play, even though the tariffs are still looming. No.
And that's exactly why you want to own a barbell. That's why you want to own quality of this environment, because the macro still is uncertain. We don't know where growth is going to go. I think you're going to see sub 2% GDP in the quarter, but I don't think it's going to be negative. But what if it is closer to zero? I don't think that's the case, but what if it is? So you want to own some defensives. I think you also want to own some cyclicals. If you notice, today is like the first day that actually cyclicals are actually working, other than financials. They're not working.
So, Josh, Barclays now revises their forecast. They see a 50 basis point cut in July. It's good to see you. Ooh. Traffic can be pain sometimes in this city.
So many helicopters
and around it.
Mine just had to wait to land. It's unbelievable.
All right. So what do you do in the market? What do you make of what this week has delivered on the back of disappointing economic news?
Well, I want to make one statement about the macro being uncertain. It's always uncertain. In late 2006, when the Fed was still hiking rates, they had no clue that by 2007 the yield curve would invert and we'd be in a recession shortly after. So this idea that there's ever any certainty, I think we need to throw that out. But bigger picture, I think all that's happening this week is just a reversal of extremely oversold conditions. 25% of the S&P 500 last week had an RSI of below 30, which is what technicians would say are extremely oversold stocks. Less than 10% of the S&P last week was above the 10-day.
Yeah.
Right now, as I'm speaking, more than 90% of the S&P is back above a 10-day. That is a dramatic reversal. But to Stephanie's point, I don't think there's indiscriminate action here.